Okay, hello everyone. It's Karen. Today is June 6th, and I wanted to share a little bit of information with you about the Park City real estate market, in addition to discussing some things about the national overall market, as I believe that it's my responsibility as a realtor to inform you, not scare you, but to keep you in the loop of what's going on both here in case you ever want to buy or sell here in Park City as well as nationally and to squash some of those headlines. So this is my first time trying this system that I'm using. So just bear with me as we figure things out. Feel free to drop a comment below if you have any questions, if you like what you're hearing. Please leave a heart, a comment, a like, whatever you want to leave. I would love to hear from you. And of course, I want to make sure to answer all of your questions. So let's dive right into the Park City real estate market. So it is June 6th, so I will discuss a little bit briefly of what happened in May here in Park City compared to the previous month or last May. So overall, we are seeing a drastic increase in inventory. So Park City, we should have inventory over around 1,200 units. In February, we only had 250. And today, I'm pleased to report that we are right now at 601. Is this a bad thing? No. Is this a normal thing? Absolutely. I'll dive into my thoughts later. Active listings, of all of the active listings right now, or actually in May, majority of them were between 1 and 2 million. 1 and 2 million. So 162 listings between 1 and 2 million. And just for reference, 65 listings were above 5 million. Okay, but we are still down numbers compared to 2021. Right now, well, at least in May, we had 475 listings compared to May of 2021, where we had 570. So that is a huge difference. And I can't wait to see what happens this month. Of course, we're still at the beginning of the month. So our absorption rate, now what this means is how long it will take for all of the existing inventory to sell if nothing else hits the market. That's what the absorption rate means. We are currently sitting at 2 months compared to 1.78 months in May of 2021. So we are getting the higher the absorption rate goes, I think up to about 5 or 6 months. 5 or 6 months is a healthy market. Okay, 2 months means that we are still very much in a seller's market. So let's compare some stats of May 2021 to May 2022. So the average list price is up only 2%. The median list price is up 25%. The median sales price, so what things sold for. Now, keep in mind that Park City is in Utah, and Utah is a non-disclosure state. So a lot of these sales might not actually be recorded and reported. They've recorded, but not reported in terms of the price. But that number is up 40%. And the average days on market is down 28%. So again, those numbers are all 2021 to 2022, and I'll make sure to add some stats up there shortly. So for the week, let's talk about what happened. This is the week right before Memorial Day weekend, so we're lagging by about a week. So the closed sales was down 25%. So again, that's the end of May. The closed sales were down. The percent of list price received was up slightly. We're still hovering around 99%. And days on market, 4 days compared to 3 days. But that is still down 56% compared to the same week in May of 2021. So we were at 8 days and now we're at 4 days. So again, not a super drastic number. So let's discuss some of the reasons why we might be seeing some of these numbers changing. So we've got a few factors here. So as you know, the resorts closed on April 17th. So as of April 17th until like literally this weekend, there's really a lack of people in town. So there's no resorts open, there's no skiing, a lot of the hotels closed, a lot of the restaurants closed. So as much as this is a seasonal destination, there is still a lot of people who just don't come during those months. So that's why we see some of these sales decreasing. We have to think of a lag, right? So what happened 2 weeks ago, they might have gone into contract 2 weeks, maybe 30 days prior, maybe their new development. So there's a lot of factors that went into play back, when those went into contract. So again, we're just reporting what has closed. So we have to think about the lags. So we've got mud season, we've got school breaks, right? So a lot of schools a lot of schools that are ending, graduations, that's also leading to fewer people out there. Interest rates, obviously, going up. Interest rates going up, a lot of people are hesitant about buying because we don't really know where we're headed and when the peak will hit, right? So what we had in the 2 to 3% is just not happening today. And I think a lot of people are trying to figure out, is now still a good time to buy, even though we're hovering around 5%. But overall, the good news is that inventory is up, is drastically up. So buyers, this is what you've been waiting for. You now have more inventory. You don't have to make decisions today. And this is a good thing. This is healthy. So let's compare this. What I did was I pulled some numbers as well for what happened pre-COVID, because I think 2020, 21 were all very much an anomaly where we saw increasing values going up by crazy numbers. I think in a previous video, I said about 37% nationwide. And here in Park City, of all the meetings that I was in, we were seeing an average of 5% each month. And that's just not normal. Okay. So pre-COVID, I'm comparing May 2019 to May 2020. So pre-COVID in 2019, we have 130 sales closed versus 87 in 2022. Median sales price in 2019 was 864, now is at 1545. And the price per square foot, $258 per square foot back in 2019 compared to $500 per square foot today. So again, we are seeing, if you look at the charts, and I'll make sure to post them, you will definitely see that the charts kind of go in this, like, they're kind of level, and then all of a sudden we see whoop, and it's right off the screen like now. And again, that was caused by so many different things. Obviously, the pandemic, people were fleeing to a lifestyle, and we had this artificial increase in values overall because we had so little inventory compared to the demand. So supply and demand, very simple here. As more homes are starting to be built, then people can actually move in, people can finish and then sell. So all of this is leading to more inventory. So I guess the big question is, are people moving out of town because they are going back to their urban environments, or are they just selling now because they can actually go find something else to buy? There's a lot of really great insights here and intel that I'm trying to figure out as I go, and that is my responsibility to you as time goes on to answer some of these questions. So nationwide, let's discuss that quickly. So are we headed towards a recession? Maybe. Will we know when we're in a recession? Not until we're probably about 2 quarters into it. But what we know for sure is that there's not building houses quicker at this point. So there is literally no point in thinking that your home value will go down because there's simply not enough new inventory hitting. And unless there's something that drastically impacts people and makes them want to move, which we've already had that, at this point, we are still facing we do not have enough homes for everybody that wants them. So what we're seeing now, and this is the word that I want to kind of get you to remember in your head, is this is a deceleration. Deceleration is not a bad D word. Deceleration is simply a slowing down of the home values, okay, of the home prices. So they're not going up double digits. They were never meant to go up double digits. That's not normal. They typically go up between 3 and 4% a year. So if you, like me, my property value shot up crazy high, that was a gift. As far as I'm concerned, that's a gift. We cannot rely on that happening year after year. I don't know if Zillow is going to figure that into their valuation tools and all these other valuation tools. If you're curious about what your home is worth, definitely do not expect this drastic increase year over year. It's just not meant to happen. So don't be discouraged. Number two, home prices are still up. Okay, home prices are still up nationwide. We're still seeing a very low absorption rate, which means in most markets we are still seeing a seller's market. Now, we won't really know when we're in a buyer's market until we see some trends, but at least for now, not getting 10 offers and only getting one does not equal a buyer's market. Okay, buyer's markets are typically more inventory, sitting longer on the market. And when the percentage of active listings to actual listings going into contract continues to increase. Okay, so that is when we hit that buyer's market. So we're leaning towards normalcy. All right, we've all been wanting this. I know that a lot of buyers right now are feeling this, like they're just exhausted, right? Like I read something yesterday from an agent that said that her buyers were so thrilled that they won a bid on their first try. Like it's not normal for people to have to bid on, multiple homes and lose out multiple times. So I think that we should not be discouraged, and buyers out there, if you are having a bit of fatigue, it is normal. But I do think that right now is this opportunity market where there's more inventory coming, where the buyers, maybe you've slowed down a little bit. Maybe some buyers have been kicked out of the market because of the interest rates, because you're now spending money on gas and inflation in general is up. But what I recently heard from David Childers from Keeping Current Matters is that of all of the mortgage providers, they're all expecting, for the most part, that these interest rates are going to level out. They're starting to plateau. We're already seeing a trend like that. Unfortunately, we don't have enough data yet because the interest rates only started going up, let's say in January, February. So, we're still not that high, like say 3% to 5%. But unfortunately, there are definitely still buyers out there who are being kicked out of their price points, let's just say. We have to assume that many of them, the comps, when a home appraises, they might have been able to afford what the house was listed for, but could not afford the increase when you factor in multiple bids. So complicated market right now. I certainly have been through this many times in New York. I can't even tell you how many cycles I've been through from 2008 when I started in the business right before the recession. But what I can tell you with certainty is that a recession does not equal a housing crisis. And I will share some slides with you, and I have shared this before, that over time, with the last, say, 5 recessions, only 2 times did we see housing values go down. And the most recent one in 2008 was actually caused by the housing market, or by the lenders, actually, who were basically lending money to anybody who had a pulse, basically. So lenders are being a lot more strict now, and so buyers are not having as easy of a time getting lending. So if you do have a buyer who has lending, you can be assured that you probably have more equity, that you're able to put down more money, and you have reassurance that, like, say you lose your job, the bank has already factored in that level of risk. So I know I went on for a little bit today. I wanted to really share some insight with you. So again, if you have any questions, please don't hesitate to ask. Leave a comment. Check out my videos on my YouTube channel. I would love to hear from you and hear if you have any feedback, what you're seeing in your market. And again, if you are interested in buying real estate in Park City, selling real estate in Park City, please let me know. And as always, I want to be your global real estate connector. So if you have any real estate needs anywhere in the world, just let me know. I would be happy to connect you. Over the last few weeks, I've made connections with Northern California, with Chicago, with Boston that just went into contract. So I'm certainly sending referrals all over the country, and I have the ability to do so all over the world. So thanks for tuning in today, and I look forward to seeing you next week. Bye.